Hey, good morning. Jeff and Billy here with Crossroads Consulting. Hope everybody's having a great day. One of the benefits that we offer is, well, hey, employee benefits. That's a benefit that we offer. Listen, there's a lot out there with employee benefits. It's really a hot topic. You hear it in the political views and on the news channels every day. The cost of it, the lack of offerings through the plans, the unknowns, with employee benefits. And we've been doing this a long time. We work with some great employee benefit specialists out there that know the laws, know all the plans, know everything that goes on with it. And what we do is when we're meeting with our clients, we sit down, we figure out what their needs are. We gather data like the demographics, their current rates, current plans, renewal rates. I mean, this is all data that the carriers are wanting, right? Remember back in the day where you didn't have to provide any of that. You would just get the census demographics and we would come back with a claim, right? But the health companies have gotten smart and they're like, well, because you're under 100 employees and we can't ask for personal data per se, we're going to determine whether you're a good risk or not based on what your renewals are, right? If you're getting your renewals and it's only like 10%, that's a pretty good increase. I mean, we don't like any increases, but let's face it, 10's better than 30. And if your renewal is 30%, then they know that something has gone on with your plan, with your claims history that year. And so those are the items that they look at. So, I know that we've had some big cases lately, and we've learned a lot about it. And just over the years, it's been an issue. It's one thing that, keeps companies calling us is because that's what we do. We specialize in working with this. And I know you've had a ton of experience with that as well.
Yeah, the health insurance, ever since Obamacare or ACA was passed, I don't know, 10, 15 years ago, the health insurance field has changed dramatically. The whole underwriting process has changed. A lot of times people, back in the day, I'm not going to give you an invoice because I don't want you to see what I'm currently paying.
Right.
Just give me a quote. It doesn't work that way, not anymore. Because I'll tell you one of the key things about health insurance. If you have a group, say you have 30 people or even 60 people or more on your medical plan, and your current rates are high versus somebody across the street who has a similar company, similar profile, but their rates are a lot lower. Well, the premium that you're paying has a risk element built into it. So, for instance, if you got a $2,000 deductible PPO and the single coverage is $750 a month, well, that tells me right there that you may have only had a 10% renewal this year, but historically you've had some fairly high renewals. So the premium that you're paying now does disclose to some extent a risk element. If your premiums are really low, then you got a pretty darn good group. Your premiums are really high on a similar plan, there's an indication. So that's why carriers want to look at what your current rates are, but they also want to look at the plans because your plan might be a little bit different. Plans don't match up precisely.
Well, that, and you have a 20-person company here with similar demographics to this 20-person company. Over here, you only have 8 people on your plan. Over here, you have 18 people on your plan. Participation weighs a lot into what your premiums ultimately will be. That's one of the factors, right? I mean, if you're only having 8 people on your plan, well, who are the people in your group that need the insurance? Those 8 people. The others, diversification,
well, you run into
participation.
that adverse selection.
Adverse selection.
If your participation is trending downward, your premiums are going to go up a little bit higher. The only people who are going to stay on the medical plan are the people who are going to use it. But the other element with Obamacare and the government exchange, I don't know if this is by intent or by accident. I'll leave it up to you to decide. But the government exchange is actually competing with small groups or insurance, small group insurance plans, because younger people are gravitating towards the exchange if they can qualify for a subsidy. But there are some laws and some rules that expose people who go to the exchange, get a subsidy if the employer is offering affordable health care. So there's some elements of it, but make no mistake about it, there is competition with the government exchange and small groups, and it is impacting participation. The carriers are still holding to, for the most part, the 50% participation. At least we see that more on the PEO side. Open market, they get away from that a little bit. Maybe they'll take less than 50%. But at the end of the day, I don't care what market you're in, your premiums are going to be impacted if your participation is low and it's trending downward.
Yeah, it's one of those things that just make you scratch your head. So if your agent, your broker is asking for a lot of demographic information and plan reviews and all that, it's so that they can get you the best information. The day of not giving and getting a good rate just because they want your business, it's out the window. And a lot is determined by the census with some of these national prescription databases, that if any of us have gotten a prescription, a legal prescription, that is, I got to throw that out, you get a legal prescription, it goes into this database and they're able to tell what is being used. So, these are all things that we have to look at, and you have to have patience. It's frustrating. Costs are going up every year. That we sometimes can get creative and save companies money, but there's a strategy there based on what an employer wants to pay versus the participation, and sometimes we have to increase a little bit here in order to get higher participation. And it's a whole strategy.
Yeah, the last thing I would say when looking at a group medical plan is try and have more than one plan, or try to have more than two plans in your portfolio. Typically, PEOs go to 4 to 5 different types of plans, but there's a strategy involved, a combination of the 4 metals: platinum, gold, silver, bronze. But even looking at the HSA plans, the HSA plans are kind of interesting. There's some strategy around the HSA plans, but have a diversified portfolio of plans, but attach a strategy with your combination of plans, because that can help a great deal in participation.
Yeah,
so
yeah.
there's a lot that goes into it. More information is actually better than less information.
Yep. So if you want to learn more about that, stay tuned to Crossroads Consulting, xroads.com. We're going to bring on a couple really good experts that understand the benefits, and we'll be doing that show here down the road, and we'll let you know. Thank you.